Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group.
Hello and welcome back to Kitco Mining with me, Paul Harris. We're at Mines and Money in London. A great pleasure to be joined this morning by arguably the head of the gold sector, Mark Bristow, President and CEO of Barrick Gold. Good morning, Mark.
Hello, Paul.
Well, thank you for joining us today. 2022 has been quite a year, quite a ride for the gold sector. What for you are some of the notable things and highlights of the year?
Yeah, it's been a fun year. Getting back to normal first is one. I think, as I said in our last quarterlies, reaching those key milestones that we set ourselves back in 2019, people-based, very special for me to see, Nevada Gold Mines really getting together with one mission, one team, and that is, augurs well for the future for that business. Keeping with people, transitioning, if you want to be relevant and agile, you need to work at reinvention as part, and particularly in the teams. And so had quite a lot of changes in our team over the year, and that's really set us up nicely for the future. And then, of course, some key projects that we're working on, the Pueblo Viejo tailings facility, getting that embraced and through the public consultation period after a very rocky start back in 2019. That's a big achievement. And we've still got a lot of work to do in Argentina because, Argentina is really struggling under its fiscal challenges. We made progress in Papua New Guinea, not as much as I would have wanted, but really built a relationship there. And talking about relationships, I think the deal we did in taking Acacia private, that business in Tanzania, and our relationship with our communities and our host government have materially improved, and I'm excited about that. And it's been a big opportunity to unlock value. And then finally, Pakistan and taking something. We all talk about transparency and how do you build real partnerships, and that has been a really energizing engagement on a personal scale where we've been able to complete over 2 years of after 2 years of negotiation, the framework agreement, which plots out where we need to get to build Reko Diq, and then the change in government in country, and then taking that framework agreement and negotiating the final sets of agreements with the opposition or the new government, and then yesterday we finished the review by the Supreme Court. We await their findings and statements around that consultation period. But I don't think there's ever been such a more transparent engagement. And so when you put that all together, I think those are the real positives of this last 12 months.
Well, thank you, Mark. There's a lot to unpack there, and I'd like to dive into some of the specific points there as we progress with our conversation. I'd like to start off with something you didn't mention, and that's paying down debt early. And again, I think this highlights part of the leadership position of Barrick Gold in the sector. In recent years, yourself and John Thornton, the chairman, have turned the company's balance sheet around. Congratulations there. And more recently, you chose to pay down early about, let's say, $700 million of debt. Why did you sort of take that decision to pay down debt early?
Paul, you'll remember back in 2011 when gold peaked for the second time to $1,900, and everyone rushed off to do these big, large premium M&As. Randgold at the time had a lot of debt because we were building out 3 projects simultaneously, and I took the decision that one, we wouldn't change the gold price in which we allocate our capital, and 2, we wanted to bring down the debt, and we used those margins rather than chase these M&A transactions. And that really put Randgold into a standalone position in the industry. And in fact, I don't think I'd be sitting here today representing Barrick if we hadn't done that. And the opposite was the case for the rest of the industry. And so I've always been a conservative person. I don't believe in that a gold mining company should carry debt at the corporate. I'm very comfortable with debt at that asset base, and that's how we built Randgold Resources. And so long dated debts out to 2042 doesn't make a whole lot of sense for a mining business. Our business is to maximize the ability for our owners to participate in the metal itself, whether it's gold or copper in the case of Barrick. And so the first thing we did was fix the business. Immediately after that, which is what we promised, fix the business, focus on best people and best assets. And I think it's important that, again, unlike many mining companies that have done deals, we cleaned up our portfolio after doing those 3 mergers in 2019 and got rid of the non-core assets. At the same time, we fixed the balance sheet through building cash to balance the debt, because the debt's expensive debt. And so once we had that, we took away our exposure to the market. Because, in mining, often when you need finance in the trough of the market, your traditional investors don't have any, because the market's down like we're seeing today, and they've got redemptions rather than inflows. And so for us to be able to invest traditionally, that is, invest in the troughs and make money in the peaks, we need to have our own resources available, and that's why we built that. Once we had matched the debt with the inflationary pressures brought about by all this fiat money printing, the cost of debt has risen above the cost of the debt that we currently own. And so we saw an opportunity to buy back debt below its face value. And that's what we did. So the tender was for just over $700 million. We closed the tender last week, and we got in just on half of that. The first thing we did is we tested the market initially, and then we put out a tender. And again, we saw it as an opportunity, and it reduces our interest rates that we pay every year. So although we've got no net debt, we still carry the cost of interest. And so that's reduced. And we'll continue to look for those opportunities. I think, to put it in perspective, my job is to always look at ways to create value within our business ambit. That was an easy one. Same way as we're buying back shares. Lots of people going out there doing M&A deals. We don't see value in a lot of those deals, but we do see value in our own shares. And I never have thought that we'd have been able to deliver on everything that we promised the market back in 2018. Last year, record return to shareholders in the history, and a low share price. So we've been investing in that.
Well, sticking on the debt theme for a moment, several of your peers have taken advantage of what until recently was a relatively low interest rate environment to sort of refinance their debt rather than making meaningful dents into it. Now that we're in a higher interest rate environment, as you just pointed out, the top 10 gold producers, not including the Australians, have aggregate debt of some $19 billion US. With margins being squeezed by increasing costs, while the sector in general is in a better financial shape than it was a decade ago, has the sector missed an opportunity to really put in place very healthy balance sheets?
Yeah, I don't think the balance sheets are healthy, and more importantly, what you got to look at is what is that balance sheet supported by? What is the life of mines of, particularly when you talk about gold industry, what are the life of mines, and can they support them? And just like 2011, out to 2015. That voyage was interesting. 2011, gold price was 2019. So that was the case with us a few years ago. Super high commodity prices. Today, it's not far, but the margin is squeezed probably $300 an ounce. And look at what's happening. So, and again, we're seeing the same behavior as we saw back in 2015. And remember, Barrick was a product of that over exuberance in 2011, 12, and 13. And then when that squeeze came on the margins, it didn't have a business, but it had great assets. So I think your fingers on the right button there. It's a real issue, and one thing that we don't do. You saw the discipline we showed in our dividends, and I'm a big dividend believer, but it should be supported by your P&L rather than a promise. And I think when you look at Barrick on a comparative basis, it's definitely capable of investing in its own future, no matter what the gold price is.
Okay, paying down, I think it was a big signal to the market, the amount of debt you look to pay down, but it also suggests that you perhaps don't see better things to do with your money. As you mentioned, you're all about creating value. You didn't see buying other deposits or other mines or other companies as a valid alternative at the moment, despite the fact market capitalizations are very, very low. I mean, is that a fair observation? You just don't see value in the market?
Yeah, there's definitely very little value in the market, but that's not the reason. The reason for paying down that debt is it makes good commercial sense. We had like $8 billion of liquidity. Now we got a little bit less, but that is that's a significant amount of liquidity for a gold company. And gold businesses, you got to be careful about using cash to buy things, particularly in a depressed market. Your equity is your currency in these sort of opportunities. But fundamentally, the gold industry, and I'll take you to another point, hasn't spent money in replacing the reserves it's mined.
I want to talk about exploration in just a moment.
So that is our problem. And we are spending money to ensure that we have a future.
I think, if I recall correctly, during your recent Investor Day, when somebody asked you about M&A, you said the ideal company would be another Barrick. And obviously there isn't another Barrick. But you also mentioned possibly tier 2 assets. And I think that's the first time you've mentioned tier 2 assets. Previously, you've spoken about you'd be interested in tier 1 assets. So it seems your sort of goalposts are perhaps changing due to the realities that there's not a great deal of tier 1 assets out there.
So in 2019, when we combined with Randgold, we had tier 2 definition in our portfolio. We don't have a tier 2 asset in copper because it's a different business. So there are definitely Tongon in Cote d'Ivoire is a tier 2 asset and a very profitable asset. It's coming to the end of its life, but we still keep adding more life to that asset, and it's a great generator of cash. But for me, there's tier 2 in Canada, for instance, because Canada there are not many I don't think there are any tier 1 assets in Canada that fit our criteria, and that is you've got to be more than 500,000 ounces for more than 10 years in the bottom half of the cost curve for that 10 years. So, but we've got some big, we got a really serious asset in Canada in the form of a tax shield, and again, if we were to be able to secure something with strong cash flow, even if it was a tier 2 asset, that would be of interest to us.
Well, that plays nicely into my next question, Mark, and being a little bit of devil's advocate here, instead of perhaps buying back $700 million worth of debt, you could have perhaps bought Marathon Gold or Skeena Resources with 2 or 3 multi-million ounce other things via pipelines such as, Revival Gold, Liberty Gold, Moneta Gold, O3 Mining. Why was sort of paying down debt more attractive than really sort of filling out assets into your pipeline?
So it sounds as though you're very long on those juniors.
Well, no, I'm just, as I say, playing devil's advocate. You know, most of these companies are at 52-week lows.
Skeena we sold for specific reasons. We're not going to buy it back. That was part of cleaning up our portfolio, and again, not to go down that rabbit hole, but we look at all those assets. And to your point, we do apply the tier 2. We have always done it, but it needs to be, we look to around 300, so 200 to 300,000 ounces a year, 3 million ounces project, which is the old Randgold model, and at least 10 years of production in the bottom half of the cost curve. So. Again, and again, it needs to have value in it, and preferably, if you're going to pay a premium, it should have potential to add life, so that you can get your premium back. And so, I think you and I have spent enough time together discussing these things. It's a long game, this, and once we invest, unlike an investor who can sell the stock, we're committed, and we're in. So we do look for long-term value opportunities.
Okay, some of your peers have been in sort of buying mode. But were you surprised when Agnico Eagle Mines and Pan American Silver went over the top to buy over the top of Goldfields to bid on Yamana Gold?
Well,
it's the first sort of transaction like that for quite a while.
Yeah, it is, and they're not surprised because it makes a lot of sense. The surprise side of it is, why now and not a long time before, and that but certainly I think it's good for the industry what happened there.
Okay, thank you. Now a key part of your thesis is the importance of exploration. Barrick spends a lot of money on exploration to find more resources at its brownfield projects and its existing mines, but a lot of exploration in the sector is done by juniors. What is the relationship between sort of Barrick and juniors, and Barrick potentially funding juniors?
So that's a constant debate, as you know, in the industry and by opinion makers. For us, I think that any industry needs an R&D component to it. And the junior mining industry is very much contributes to that R&D, and some more than others. But at the same time, if you're a miner, and Ian Telfer often talks about the fact that you can't grow a company through exploration, which is, clearly he has never followed the Randgold story, and even Barrick, along with Randgold, if you look back in history, it's not the deals that have created the value. It's the continued ability to add ounces after the transaction, because M&A merely piles up your production, and without a runway, you have no opportunity to deliver any value on that transaction. So sure, as you know, we don't hesitate to do deals, either hostile or friendly, when there's an opportunity to contribute to the value of Barrick. Exploration-wise, again, if you're a genuinely long-term explorer, we're your perfect partner, because once you discover something, we'll pick up on it and earn into it and take ourselves to 80-85%. And you won't have any exposure to that significant risk component between discovery and feasibility study, full feasibility study. And if you're really focused on creating that sort of value, it unlocks you to go and continue to do additional exploration, look for the next one. And that's the way we look at it. We're not great believers in splashing around, investments, minority holdings in junior companies, because our view is that if we would like to discover it ourselves, if not, we definitely want to partner with the junior that's discovered it and ride the value the value addition from that point of discovery to feasibility study.
Thank you, Mark. I'd like to go back to something you mentioned a while back in our conversation about the relationships you're building in Pakistan, Tanzania, and other places. You're also giving sort of local participation in certain jurisdictions. And I think this is part of a growing trend we're seeing around the world. And also we're seeing governments wanting to be able to buy the gold that is being produced in their territories. How are these trends that are going to become the norm in the sector that you expect to see more used around the world?
I think when you look back at the mistakes that mining have made in the past, and I even, I've said this my whole career, and Randgold was built on the partnership formula, sustainable partnerships. And again, where in all countries we invested in investing on behalf of our host country. So Mali, for instance, the mining code provided a 10% free carried. We added 10% to that and financed it because we believe in these underdeveloped countries, the private citizens aren't able to co-invest or invest, and certainly in those days. And so, giving back more to the population through a bigger investment that the government is held by the government was one of our philosophies. I think too that recognizing that no matter how we own our mineral rights, we are mining a national asset. And this rapidly evolving, more modern world, young people want to see what's happening and how their natural resources are being exploited and who benefits from them. So, the concept of partnerships for me has always been on a 50-50 basis. You saw the long extended frustration in Tanzania that eventually culminated in some irrational behavior, although it was well-founded, aggression towards the mining industry. And we were able to fix it by going to sit down and look at, let's see how we do things and take away that mistrust that had been built up over many decades. And that same challenge is, you find it in the United States, like where we operate in Nevada. One of the big things we did is had to build our license to operate, and we were big contributors to the state of Nevada coffers during COVID, for instance, when the strip closed down and suddenly there was no revenue. And so, and we also were able to introduce the northern part of Nevada to the southern part of Nevada, and build a bridge across and show that, what a lot of people didn't know is the people that worked for Barrick and now Nevada Gold Mines, they earn enough money to look after themselves, their families, put their kids through high school and go to college, whereas a lot of the workers in the strip don't earn enough money and they rapidly become reliant on social security. And that was a big epiphany for many of the Democratic leadership in the south of Nevada. So it is part of managing in a very globally changing world. And I think that mining has an enormous role to play, and it has to if we're going to develop the rest of the world.
Okay, thank you, Mark. Now, I know you're very proud of Barrick's ESG achievements. You've spoken a lot about how mining can really turn around people's fortunes and opportunities in Africa. So it must have been sort of quite difficult for you, I imagine, when Barrick was recently sued in Canada for alleged human rights abuses in Tanzania. What's going on there?
So this has been going on for a long time, no surprise. We've had conversations with these people who fundamentally, I think, are anti-mining. But we have a court case going in the United Kingdom, similar court case on the same basis, and the accusations are outrageous, suggesting that the police are our protectors, which is nonsense. And again, we've, like I always do, we've reached out to these people and said, if you're really serious about your accusations, which we haven't seen, substantiated, come and visit. We invite you in to come and join our teams, go to the communities that you say don't want us there, and meet them. These are elected people. I meet them every quarter. Our teams work with them every day. And I believe in absolutely in community policing and uplifting society, and all sophisticated and developed societies have a certain amount of security, policing, and the feeling of being safe. And so, it's astonishing. I mean, we've extended invitations to some of those detractors as long ago as July, and we still haven't had anyone come and visit. So, and when I speak to the government, and particularly the new president, her view is, this is astonishing. Why don't you, if you think the police are so badly behaved, sue them. And why sue the company if this is a government institution? So anyway, the court case in London is playing out, and again we are committed to ensuring we are there and we defend ourselves, and then we'll have a competent authority opine on some of these accusations. And this is not the first time it's happened in Canada, although everyone sounds a little bit astonished, and everyone has the right to do something like that, and we have the right to defend ourselves. But certainly the initial paperwork, as we've said publicly, have inaccuracies with it, and it certainly, I mean, if this is what they're accusing us of doing is real, this should have been dealt with long ago in country.
Thank you, Mark. Now, to draw everything to a close today, what do you think 2023 will bring us? Will it be a good year for gold and gold equities?
Paul, it's a tough time we're going into. I know everyone would like to think it's not going to be. It's just like, quantitative easing. We had many conversations about if you print a whole lot of money and the value of your country's GDP goes down, that's not a good formula. And people talked about pending inflation, caution that when inflation arrives, and I've worked through the last big inflationary time, then it's too late, and then you've got to deal with it. And the first reaction by the Fed to say this was transitory says a lot for the appreciation of what was happening with this constant printing of money. And again, I think as we saw in COVID, this sort of inward-looking assessment, and the view that if you think about something, it's going to become a reality if you think about it enough. But unfortunately, I don't believe we're in that place. And what no one talks about, certainly here in London or back in New York, is the consequence of all that on the emerging markets. We saw, we went into COVID on the back of a more globalized world. We came out of it on a deglobalization of the world and a complete neglect, a very selfish behavior by the developed world on just vaccines. And at the same time, another round of extraordinary printing of money. And now we've got the inflation crisis. And on top of that, we've got a very disruptive war going on in Eastern Europe, which is complicating. And we tend to merge the two. They're not. And the way to best look at it is, if you listen to Wall Street, everyone's saying it's all over, it's going to be fine. And then if you listen to the Fed now, there's a very clear resonance of we are continuing to jack up interest rates until we're on top of this gremlin. And we, I take you back to 99. Remember gold price 260. Things were really bleak because everything else was perfect. But there was a looming problem, and that was IT and IT companies trading at 3,000 times PE. And people who say, don't worry, it's all fine. This is the new world. And what happened? Same boom. And we saw the same with the housing crisis and the consequential global financial crisis in 2008, which went on for 5 years. And so, to think that this damage that has been created by the way the pandemic was managed, compounded by this quantitative easing, very loose monetary system, people making gazillions out of nothing, and what we should have been doing is behaving in a more conservative basis, like we're buying back our debt throughout this period, because then in little bits of inflation balance the books. Now we've got this imbalance where you got 3 times GDP of global debt and very weak economies and nationalism on top of it, and then a world that no longer talks to each other. So I think we're in for a tough time. Now, to be a little bit morbid, that's good for gold. And we've seen on top of that, this hunt for something alternate in the currency markets. And, people thought crypto was going to be some wonder currency. Well, it's not, and it's a failed platform to trade effectively for people who want to trade invisibly. And so gold, I think through next year, we've probably got another tough year ahead of us. But that's going to bring opportunities for Barrick, because we've got a genuinely strong balance sheet, and then on that, and our copper industry is growing, our copper business is growing. I'm excited about copper. I think right now, if you invest in any metal, you're probably in good shape, because the world needs a lot of metal, and we're going to work out that mining is here to stay. And so I guess that's the real horizon we should all be looking towards.
Excellent. Well, thank you very much for sharing your opinions and thoughts with us today. Mark Bristow, President and CEO of Barrick Gold.
Thank you, Paul.
And stay tuned for Kitco Mining for more from Mine to Money London.
Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group.